Walking through the busy financial districts reveals a palpable sense of anticipation among market traders today. Monitors display flashing green numbers as the value of gold approaches unprecedented territory. This real-world observation highlights a profound transition in global wealth management as geopolitical realities reshape traditional investment strategies completely today. The international spot price of the yellow metal is currently testing a massive psychological barrier. Analysts report that gold prices are challenging the key resistance level of $4,800 per ounce. This intense battle between buyers and sellers reflects a market standing at a critical crossroads today. Recent developments show a significant weakening of the United States dollar across global foreign exchange markets. This specific decline has become a direct driver, pushing the value of precious metals much higher. The currency index recently fell to a 6-week low, providing strong fundamental support for rising gold prices. The softening of inflationary pressures provides additional fundamental support for the continued rise in commodity prices. Economic indicators reveal that consumer prices have temporarily cooled down despite earlier energy supply shocks. This unexpected data has successfully eased anxiety regarding aggressive interest rate hikes by the Federal Reserve this current year. The primary catalyst for massive appreciation earlier this year was the outbreak of war in the Middle East. A short ceasefire brokered recently provided a brief window of stability for volatile global financial markets. Renewed hope for peaceful diplomatic solutions has eased fears of prolonged energy supply chain shocks completely. Market participants are closely watching the upcoming monetary policy meeting to determine future financial directions. Analysts note that as long as the market does not seriously consider a rate hike, gold will remain strong. There are currently no signs of impending rate increases, which helps precious metals hold their ground. Warning signs have recently appeared on relative strength indicators, which reached heavily overbought levels and formed crossovers. This particular metric suggests that the broader trend remains upward, while the pace of gains may limit. The market could eventually transition into a distribution phase, where institutional investors take massive profits quickly. Central bank demand alongside rising fiscal deficits and a softening labor market point toward continued upward trends. As policymakers navigate the uncomfortable truth of persistent inflation, gold remains the primary hedge against destabilization. Traders should monitor the critical support and resistance levels very closely during all upcoming trading sessions now.